Another episode of How to Help My Dying Cat last night or this morning. Very unfortunate. Very nice cat. Very old cat. Very nice cat. All right, market taking a little bit of a break. MasterCard actually up in the markings today. Amazon up 0.25% above the 50-day. That's good. What's up, Ellie? What's up? So I guess BTC had a dip. What did Riot Blockchain do? Okay, it's not down 97%. That's good. Little dip on Riot. Um, let's see. I don't really have a whole lot that was on my docket. What are you looking at, Ellie? What's going on with you? 96? 96 what? All your stocks are red? Yeah, it's okay. I think we're back in a holding period. Damn, Ellie. I think our there we go. Hey, let's take a little bit of time. Oh, you know what I did yesterday on my big account? I should have done it here too. I guess I could still do it again here. Remember those options I was down like a bunch on MasterCard? Well, I'm trying to hold on to them, having some better hands, and maybe I did something good, maybe I did something bad, I don't know, but I ended up adding to my MasterCard position. So in theory, if it gets back to break even, I'll actually have a profit because it was down so freaking much. So I did add a little bit to my MasterCard position yesterday, and hopefully that should get me back to making money if we break even because I was just down so much. Oh, Tesla, yeah, yeah, yeah. Okay, let's look at that rolling leap strategy. I've never actually looked at this before. I was writing down last night. I'm like, okay, what are some things if I were to do like a rolling leap strategy? Maybe what would be some things to look for, I guess, if you will. I think average or losing positions. Yeah, no, I usually don't either. But looking at, I don't think Mastercard's story is over. I don't think it's over. Um, so from that perspective, and I was down so much. Seriously, it's like 80. I was at 80%. And, of course, I bought the high. From here all the way down to here, which is like 6%. That's the 6% drop. Just said 6.19 on my cursor. I'm like, okay, can Mastercard rise 6% in the next uh how long? However long? So 72 days. Could I rise 6% in 72 days? Probably. And then maybe that would get me back to break even ish, right? So we'll see. We'll see about all that stuff. But anyway, so I did re-up yesterday on my main account. Didn't do my small account. But let's look at rolling Tesla options. I think that may be a decent idea. Want to chat, Ellie? You want to do voice stuff, or are you not doing voice stuff today? I do have to say, Google for being such a massively large internet company. Um, my email, my Gmail, really likes to say, "Oh, not connected to the internet right now." Well, I have 12 other applications on my phone working. I hear you. Well, that's where our technical analysis comes into play, right? TA's got to stand for something. Yeah. So anyway, I did add to some positions yesterday, or that's the only thing I did yesterday actually. But we'll see what happens. Marcus in not a bad spot. Okay, so let's look at kind of happy to see you. Kind of happy to see it up today. All right. So my thought process was this: Tesla, Coinbase. No, fuck Coinbase, Justin. I ain't buying fucking Coinbase. Screw them. I don't like them. And I don't buy IPOs on the IPO day, anyways. I'll wait for an IPO base. I'll trade them if they I got a good IPO base or something, but I'm not gonna jump into them. I'm not gonna jump into them willy nilly. Recipe faux disaster. All right, so Tesla, think about rolling leaps. Think about rolling leaps, and what this means to me. A couple ways of doing this. Number one, the further out you go, the less you pay in time premium. So in other words, this particular option has 709 days left, and let's just go out. You have been warned. Nice. Let's just go out. Let's go out further to 1475, and that's how much time we're going to be paying per day. So we're paying 126 divided by 709. So we're paying 17 cents a day for the 1475 strike. That's for March 2023. That's about 2 years. January, of course, they don't go out 1475, or do they? Okay, they do. This one is 112. Is that cheaper? It is cheaper. 112 divided by, that's 15.7 cents a day. It is cheaper. That's 653 days. Oh, wait, that's why. So it's 653. So it's 112 divided by 653. 17 cents a day. So my thought process was, okay, so let's find out what is like the longest leap I could do. There we go. 8765 divided by 527 days. 16.6 cents a day. This is for the September. That's actually cheaper. I was trying to find, so essentially trying to pay, so this is 16 bucks a day. And then June 2022 is 66 divided by 436. 15 cents. Geez. They're getting cheaper on the 1475 strike. Getting cheaper. Paying 15 cents a day. I guess one of the questions I had was too is that, let's take this off, well, kind of off screen. But you were talking about 100 and an option. Yeah. Yeah, I know. I'm just using the easy math of the calculator here. There you go. Now I can see some chat. So one of the things I'm trying to figure out is um, when do you roll these? Let's say that you're right. You still need to be sure strike plus 100 to at least break even. That's not to get profit. You would need to probably strike plus 200. This is why it's about voice checks. I know you'd have some good input on this. Um, Well, there's a couple things to be to be leery of here. A couple of things as I'm starting this process. The first part is you're right, picking a target. I would agree with that. But the second thing is if I'm going out to 2023, 2 years is hard to really pin a target down. I do have my 2100, um, my 2100 for the next leg up on Tesla, and that could, I mean, that could happen within the next 2 years. Voice chat in 10 minutes. We'll be done in 10 minutes. Let's find out. Um, so I mean, a 200% rally to 2100 in 2 years doesn't seem unreasonable, I guess. Especially if just in 2022. Well, I guess this would be 2023. So in 2022, if they make 2 million cars a year and they're coming out with that cheaper model, which they should be in 2022, yeah, I could see it up at that level. Um, okay, so we can go to Stock Shed. This would be really easy to build into Stock Shed. I don't think it would take that. I don't think it would take that long, but probably not. Probably not a few minutes. Probably wouldn't take literally just a couple of minutes. It would very likely take more than that. So let's take a look at Tesla. 2100 target, and we're looking years out. So these are all the big strikes we're looking at. Okay, so 2100 target. Here you're looking at actually that same 1470, 1475. That's the 1725. Oh shoot, I don't remember which strike price I was using. Damn it, I have to start over. Um, well, actually, here it tells you 18 cents a day. I think you already had this, Ellie. Value decay speed versus dollar per day. Okay. Oh yeah, you already got it built in. You're the man. All right, so 18 cents. It's 1700. 21 cents. 22 cents at 880. Yeah, the problem is I have different strike prices. 880 is the. I guess the whole point is we're trying to pay as least we can. And then, okay, so the second effect, number one is pay as little as we can, which generally means going out further. But if we're looking at 2100, our better strike prices is 950 currently. So we're looking at 923, 950, or 317, 950 strike. That's for a 481% return. This is gonna be the hard part. What I mean by rolling? What I mean by rolling is so say you buy this March one. Let's say we buy this the highest percentage one. You're paying 20 cents per day to own this, right? Pretty much regardless of what happens, you're paying 20 cents a day to own this. Or 19, yeah, 20 cents a day to own this. 485? Whatever, we'll use the 481. You're paying 19 cents a day to own this, and I know those are probably rounded, so it's probably like 19.7. But anyway, when this reaches a certain point, we will close this trade and open another long-term trade, likely when they have a new strike price available. So in other words, let's say we did this a year ago. We did March 2020, and now we've had 2022 options. Now we have 2023 options. So let's look at the 2022 options. You're very likely deep in the money, so your intrinsic value is really heavy. Anyway, it's closing out the shorter term option. In this case, it's closing out a shorter term option for a longer term option. So we're buying more time on the option, so we can keep the leverage going past the 709 days. Because if we think this thing is going to go for the next 9 years, that's a lot more than 700 days. So we need to be able to keep that leverage. So that's going to be 365 times 9. 3,200 days. We may need to roll this 5 or 6 or 8 or 10 times. I don't know. The question I had is that, okay, here we're paying 20 cents for an out of the money call. We're paying 20 cents a day for an out of the money call. Um, I don't know in the future. This is a 2 years. This particular option is just under 2 years. Yeah, I'm not sure when that time is, Ellie. That's part of kind of what we're figuring out, and I think it's likely based on this daily decay value, because at some point, I mean, hopefully the price increases. This could be deep in the money, and so we're gonna have to figure out: do we just roll into the same strike price? That was kind of a question I had too. So let's say a year ago, because we may stay with the same strike price, we may not. So a year ago, we were at a freaking $131. So maybe we bought like the 250 strike, and today the 250 strike, for April is way down there. Obviously, if we're super close, yeah. So maybe a year out. Maybe we roll a year before expiration. Maybe it's 6 months before expiration. I'm trying to figure that out. Like, what's a good time to do that? Because we're buying a little bit early right now. Obviously, we're not running at the moment. We have loosely broken a trend. Hopefully, we'll continue up in the next coming weeks to months, but we shall see. So let's look at that same April one, because we don't have all of the strike price. So 250. I think I can Greek out here somehow. How do I adjust the stuff I was looking at? Oh, here we go. Just found it. Okay. Delta Gamma Vega Theta. Here we go. Okay, so you want intrinsic value to get close to price you paid for option. Um, well, as we roll out further, I guess the point becomes I just don't want to. Yeah, I don't want to get to the point where I'm losing premium faster. Like, there's a threshold. Maybe it's 6 months out. Maybe it's whatever the case may be. So, um, I guess we can just look at the monies or something. Well, see, yeah, that's also a thing. Do we sell out really quick? So here they're doing every 3 months when you go out further. So here in 2021 we have April, May, June, July, and then it becomes September, and then it looks like it's almost every 3 months. You have December and January there. 3 months, 3 months, 3 months, 3 months, 3 months. So let's look at the money. We're looking at 17 cents here. We're looking at 18 cents here. We're looking at 20 cents here. We're looking at 23. So we're looking to buy this 25 cents. So at some point it's going to get very egregious. 27 cents, 29 cents, 35 cents. See, that's getting harder. That's out 9 months. That's August, or I'm sorry, September 2021. Well, it's 5 months. I'm sorry, it's 5 months. Your strategy again would work with higher volatility when extrinsic value gives you profitability. Um, okay. Well, I'm just looking to stay with this thing for 10 years in one trade. All right, let's go. All right, I'm in Discord. Yeah, so anyway, that's kind of the whole point of that. What do we got here? PLNHF. Anyone chatting? No, it's just you and me, Ellie. Oh, a couple people. Couple people here, it looks like.
Yo.
Hey, what's up?
Cool.
All right, so tell me how I'm an idiot.
Can you say something again?
So tell me how I'm an idiot. I know that's really why I like to jump on voices so you can insult me in person.
Hello.
Hello? You getting set up over there? Come on, you're not professional yet?
I
Come
don't
on.
hear you for some reason.
No? Hey, what's up, Bly? You're lurking? I see how it is. I see.
Do you hear me now?
Yeah, I can hear you.
Cool.
Yeah, so it looks like... All right, spit out your thoughts. I've been spitting out mine, so you can go ahead now. Oh, now he's walking down the hallway. Yeah, so nice thing to note here is that the at the money doesn't change that much. 17 cents, 18 cents, and then 20 cents. We go from 17 to 20 cents. That's, I guess, almost 20%, but we're not talking a majority of the option. If you're looking at spending 229, you're only paying 20 cents. So that's a little less than 1% of the value of the option rolling every 6 months. And actually the fees you're gonna pay. So this is in reality $17, and you're gonna have a fee to trade an option. So it's gonna be about 75 cents. So you're gonna pay $2.75 per contract to roll this over, which ain't that bad. I think he is. Yes, he went on voice stream, decided to take a dump. That's correct.
I'm talking to you. I don't know what's going on. You don't hear me?
I do now.
That was weird because I was talking to you.
Yeah, while you're taking a dump, I see. I could hear the dump part. I just couldn't hear you part. We could hear the hallway, or what sounds like a hallway.
Oh.
And you went away again.
How did I win away? It doesn't make any sense.
It sounds like you're yelling down the hallway. Now I heard you there. It doesn't make any sense. Maybe your microphone's busted? Something's busted. Check the physical connection. Ooh, Kim Jong-un says his country's facing the worst threat ever. Wow.
Do you hear me now?
Muffled. Sounds like someone's snuffing you out with a pillow. The last time this happened to me, it was my cord on my mic.
No, I have wireless connection. What you talking about?
Okay, your wireless is messed up then. I don't know.
I'm gonna restart this thing again.
Okay. Bless says disconnect and reconnect. Probably already done that though.
Do
Mhm.
you hear me?
Yeah, it's not too bad. Still not great, but it's not too bad.
I'm sorry.
Well, that sounds pretty good. I mean, when
Okay.
you apologize to me personally for all the wrong you've done, that sounds pretty good.
No, that's not how it works.
I know.
There's
I
no,
know.
there's
Ukrainians never apologize. You told me. You told me. We Ukrainians don't apologize.
Okay.
They just kill you.
No, that's Russians.
Oh, that's Russian.
Yeah, they deny all of the things they did, and if you point it out, they just kill you. So
Yeah.
they go one by one. You don't point out what they did because
Yeah. Yeah, that sounds fair. Oh, my mom told me to ask you. She said something about like Russians on the Ukrainian border again. Is that a thing?
Yeah,
Seriously?
yep.
They're fucking coming back from are they what are they doing now?
They're trying to finish the job.
Seriously? The whole fucking country?
I doubt it, but you never know.
They're gonna piecemeal it off like they did last time. Like, oh, it's not us.
Yeah,
It's these
it's
separatists because they
other
have
guys.
all of our military weapons and what the fuck,
Mm,
man?
United States still did nothing, so just FYI.
Yeah, right.
And we had a deal that we denuclearized the country, and the U.S. gonna defend us. I
Yeah,
guess nobody cares about that. See, that's why you keep the nukes. That's why you don't denuclearize.
that's why
You keep
what?
the nukes. Very important. You keep the nukes. You're important. If you don't keep
Oh,
the nukes, you're not important anymore. Nobody
yeah.
cares.
Did you guys give up nukes?
Yep.
Uh, what the fuck,
Uh,
man?
like around 100 of those.
And they should just give you the nukes back.
Ha ha ha. You're funny.
That's bullshit.
Okay, so about the strategy which you're talking about, intrinsic and extrinsic value. Do you hear me?
Yeah, you're still a little muffled. Keep your voice a little higher.
Okay, so if we're talking about buying leaps, what the strategy makes sense. If you're talking, if we're getting into the money, then that strategy you don't need to sell it now because the reason for it is that your intrinsic value becomes more important and time decay actually decreases. So you have more time to sell it. You
Yeah,
don't have to sell it right away. You because you basically the time decay is based on extrinsic value, and extrinsic value goes down compared to intrinsic. Does it make sense?
yes, yes.
Okay, so this strategy makes sense if you're wrong, basically. Like if the stock went your way or just volatility went up, and your extrinsic value went up, and but you don't know if you're gonna get into the money, or like you're barely into them, and basically the option the option price is still would be breaking even or close to it when with both components. Then the time decays become very sensitive. That means that you want to sell it, not as fast as possible, but depending how you read the situation.
Yeah.
So I'm not sure how you want to roll them. Like what's the strategy when you actually decide to roll them?
Well, that's part of what we're looking at. So, okay, this was my thought is this only goes out for 2 years. I'm thinking 10 years out, right? I'm thinking 10 years out. So I've got stock and I'm just going to hold my stock. But I'm like, okay, what if I do an additional options position? And what if I buy, because, I don't, maybe I just buy this 1725. I'm just throwing it out there, right? What if I buy this 1725? Because remember, my target's like 2100. That's the target is 21 over 2 years is 2100. um, but if it goes, so if I buy the 1725 and we start to go up, and let's say a year from now we get up towards 1500 or whatever, um, which would put us basically here 318 of 2022 at least right now. Um, I don't have that 1700. I was thinking of okay, do I hold this forever and then once this comes up to expiration, do I roll it into the next leap? Do I or like the next furthest out leap? Do I make one trade going out every 2 years, and do I just roll this thing every 2 years with the same strike price? That was
So
an
so
option. Or
it makes sense. It makes sense. For example, if your option is getting into money, right? You have a profit, and
yeah.
then you see Tesla stagnating for next year, right? Like you like it's not going anywhere. It's going to be fine. It's not going to go crazy up or crazy down. Then you say, okay, it makes sense for me to roll right now, buy further out. Sell this one, buy further out, and just go with it. But if your option gets too deep into the money, then it doesn't make sense for you to sell it at all. It makes sense just to buy another one
Well,
and wait for this
that's
to
kind of what
expire.
rolling is. I mean, that's you mean buy another further one out of the money? You mean?
Yeah, and leave this one to expire.
Well, you don't. You would sell it. You wouldn't actually leave it to
No,
expire, right?
why would you sell it? Like the extrinsic value becomes less relevant at that point
Well, you can't let it
because
expire.
actually,
So if you take an option that's deep in the money and let it expire, you will have zero.
no, you won't. No, you won't. You're gonna receive value of the intrinsic value.
Oh, is that what happens?
Yes.
Oh, okay. I've never
You know,
let
it,
us.
it,
I've never let a super profitable option expire like that before. So I'll take your word for it. Um. Anyway,
yeah, let's try on $100,000 and see if it works.
yes, yeah, that was my. Yeah, yeah, no, okay. Um.
No, no.
Anyway, my whole point was well, one of my points. I had a couple thoughts. One of them, again, I'm trying to think out 10 years, and I'm trying not to. I mean, I'm going to anyways, but I'm trying not to like analyze every single run. I'd rather just kind of, buy a really good option and just stay with it for like the next 10 years because unless we hit a financial crisis or something like that. But my thought process was okay if we stick with the leaps because there becomes a point where you're buying this time wholesale and there becomes a point where it starts to decay rapidly. And I definitely get your point about if you have intrinsic value, you're not decaying almost at all. Because like
Yeah,
when you get down here at the 200 strike, you're only decaying at 5 cents versus at the money you're decaying at 17 cents.
yeah.
So
It
my
makes sense. It makes sense if your intrinsic value is too low to sell it because now you're trading extrinsic value.
Yeah,
You know
well,
what I
I,
mean?
I, I wasn't trying to trade the extrinsic value. I was trying to figure out at what point do the days are you still paying wholesale? So do I roll every 6 months? Because eventually they're going to have a June 2023 contract, and then they're going to have a January 2024. So maybe I buy this March, and then maybe they buy this March, and I come up with the September, and then I
It,
roll into the September at the same strike price. So
it doesn't make sense on a time basis, to be honest. It makes sense only on a rally basis. Like if your trade doesn't play out, you see it's not going to play out for some reason. Well, let's say I don't know Tesla tops out or something like this. Then it makes sense. It still correlates to the price of the stock. You can't just fully go on time.
No, I know the price will fluctuate. So I guess this is what I was thinking, is that okay? So say the price goes up. I don't know how to give this effectively. So let's say we bought these marches. Okay, let's say we bought these marches. We bought them. um, a while ago. I guess I'd have to do. Okay, us just go through a simulation. So we bought Marches for 2023. Let's say we bought them in September of last year, which of course Tesla's going to rally like a motherfucker. Okay, well this would be a good thing. So let's go back. Let's pick a date. What's our date? We're gonna go September like 15th or something.
Yeah.
So we're gonna go to. Let me write these stuff down. So we're gonna go to. Okay, so 9:15. Let's go to think back and let's go to 9:15 and we'll see what options they have available. Okay, so on the 15th of March or of whatever, they have January 2023s. Can I get rid of that? They have January 2023s, and let's say we buy the 700. We just buy furthest out of the money. So we're buying the 700 for 2023 700 strike, and we're paying the 171.50. Okay, so now today, that same January 2023, yeah, you can see that. Okay.
Randy, I'm very sorry about this. Today is like a bad day for the call. I need to switch and get on different call. Sorry about this.
Okay. All right, man. No major issue. I'll just keep going. We'll talk later.
Thanks. Sorry about this.
Okay. Bye. All right. So I guess it's just me. How do I leave the... Okay. Well, thanks, Ellie, for getting me on a good path here. How do I exit a chat room on Discord? Charts. How do I hang up on myself? Oh, disconnect. Stupid. Okay. All right, so the thought process here is that in September, we bought the January 2023. We just went out the furthest strike price we could. You believe... Okay, what's up, Jared? Yeah, you mentioned coming in from your garden. That's cool. What's up, bud? 8:15, like you. How are you up? You should be asleep right now. Oh, when does he go into school? He will go into school tomorrow.
And why I'm awake this early is because Ethan booked me. And I said, thanks for waking me up. And then he walked away like I said to him.
Good job, James. Just keep doing you, okay? Just keep being good. Okay. Rolling an option it's just when you sell your current option and buy another option with a different strike price. That's all. It's nothing crazy. But you do it, usually you'll do it simultaneously in the same trade. Having close knowledge of X company and having high conviction doesn't require to keep your phone in your hand 24/7. Definitely going to listen to the beginning of the stream. Yeah, you came in during the meat part. Okay. So right now, that same 700 option is 248. We bought it for 171. It's 248. And this is theta. And the theta, so let's look at the theta is 19 cents. We'll just use theta just for whatever reason. I don't think it's a true accounting of decay, but theta in this case is 13 cents. So theta is now 19 cents, but volatility's gone up across the board for Tesla, so I don't think you have much of an option. Okay, so this one expires in January 2023, which is still a significant period of time. So if you wanted to roll it out, yeah, see, this is only 3 months out, though. You're paying 18 cents. So if you wanted to roll it, well, okay, we got to do the same 700 strike price. You're paying, okay, so there's 248. The current strike price for this is 248 at the 700. And then here it's 260, so you are paying an additional $12. Roll 2, 3, 17, 23 is plus $12, which luckily isn't a massive percentage. So it's 12 divided by 248.4 is 5%, a 5% premium. Okay, so if we were to roll it out now, we would gather a 5%. We would have to pay a 5% premium to do that. Which means 5%. I mean, it's not, you can't do that I wonder if you did it every 6 months. Okay, so let's go out another 3 months. I thought we went back 6 months. I guess they just didn't have just didn't have all the options. January 2023. 700, 171. Okay, that is the right one. All right, so let's go out. No, let's go back another 3 months. June 15th. Obviously, in the middle of the pandemic, so I guess that's still okay. You had the June 2022s. Wow, they had 1120s. Oh, this was pre-split. This is pre-split, so that may need to be taken into account in some fashion. All right, so let's do June. Okay, so we're doing the June 2022s. And you're doing the 1120. I'm pretty sure that's pre-split. And you're paying 306. For the 1120s. Okay, so let's do 1120 divided by 5 is 224. I'm not sure how this works with the options, to be honest with you. Okay, so let's go to June 2022. See if they have an 1120. They don't appear to have an 1120. Oh no, that'd be akin to the 224. I'm sorry. All right, so let's go to today. Let's go June 2022. And they have every single dollar. Jesus. Oh, wrong one. There's the right scroll wheel. I thought it was a little small. They probably did this because of the split. I have the 224. So this is worth 480 now. And your theta is 5 cents. Oh, what was our theta back then? 23 cents. Because it was far out of the money. And then if this is indeed, here you go, 224. If this is indeed the option you would have gotten, because 1120 divided by 5 is around 224. Actually, it's exactly 224. So, in theory, you would have gotten this option, and now it has a theta of 5 because it's super deep. And so your 224 strike price currently isn't even on the chart, so I got to go back, and then let's go 224. Okay, so that was June. Now let's try to roll that to March, which is 9 months away, or 9 months later than March. So let's say roll to June or March. And they don't have that, so we'd have to choose a different strike. So you'd have to choose a different strike. Or smack dab between the 2 and the 250. I guess pick your poison here. They both have very little theta value. The theta value of this is less, but both spreads are going to be relatively large. Now Roku up another 2% today. That's not bad. Microsoft, Amazon up, Cyber up. Nvidia, looks like MasterCard took a shit. Oh no, there it is, 68. It's down a little bit. Okay. So let's pick the 250 because it still has very little theta. So we're gonna roll to the 250, and we're gonna pay 474. Well, that's actually it's the 224 is 480, or we can buy that for 515. So we either pay a little bit less and get the 250s. Okay, so our theta here is only 0.06, which isn't too bad, and that gives us an additional 9 months of time for this to work. Hmm. Hmm. So in this case, you're definitely losing $25 in terms of value because you don't have the same strike price. I guess technically you're banking $6 in profit. You could also try to roll out further again, but I don't know. I think this needs a lot more work. Jeez. Okay, so let's do this. Okay, so new scenario. When did we split? We split on 8/31 split. We're going to go pre-split to make things easy. And we're going to pretend like we love Tesla, and we're going to employ this strategy in 2017. Okay, so we're going to start in January 2017. New scenario. Start in January 2017. Go as far out as we can. We're going to try to roll every 6 months. And scenario 1 is going to be for the same current strike, for the same strike. Scenario 2 is going to be for the farthest strike. Okay? Now, I don't know if we're not going to have the similar 700 whatever percent this was parabolic run in the future. I don't think that's in our cards, but I do think we continue with a pretty decent uptrend overall. All right, so let's take. We're gonna go back down. Oh, they only let us go to June 2017. Okay. All right, guess we're gonna do June 2017. All right, so scenario 1, we're starting on 6/1/17, and we're going as far out as we can, which is January 2019. What? And you only go out to 40? That's definitely post-split stuff. They've already, I guess they split all the options too. We weren't at $40 in January 2017. We were at $340. We're not going to be able to do this. Something's not right. Oh, maybe this is a different. There's 2 Januaries. Maybe oh, there we go. Okay, so this is good. Cool. Okay, so we're doing the 600. So we're gonna buy the 18th of January, 19, 600. The theta is 0.03, and our price is 12.20. Okay, so now we're gonna go 6 months in the future. And we're gonna go 1, 2, 3, 4, 5, 6. That's wrong. July, August, September, October, November, December. Oh, I guess that's right. Okay. And we're gonna go December 1st, and we're gonna find out what is the furthest out they have there. January 2021. Okay, so we're gonna try to roll this with the same strike. Is the 600? Yes, same strike as 600, and they have 470. So we can't. Damn, that's shitty. That already blows up our whole strategy. So what do you do in this particular case? That's not anywhere close. Well, it's not that confusing. You just have to get used to the ecosystem of the options. So if you just ignore the prices and just think about the expiration dates and the strike prices, ignore the actual bid ask, beta, theta, gamma, ignore all that crap. You have to get used to the strike price and the expiration date first. That's what you have to do. So get used to that first. This is a problem right off the bat. So we already committed to a trade for 12.20 for it to go to 600. And now our ask is 31.30 for 470. Jeez, what a horrible problem. Okay, so let's look at our current price for our 18th of January. So it's at 465. So yeah, we're down significant percentages. We're down 465 from 1220. It's about 70%. And they've therefore lowered, so you can't employ this strategy. Wow. Wow. They literally island. You're literally on an island. You're quite frankly on an island you can't get out of by just rolling to a new option. So who sets the call options? People that own stock in hand or are doing something. No, market makers, institutions. They sell these options. I don't know how the strike prices are determined, but which strategy are you referring to? The one that I'm going through, or how they're fucking me right now on trying to roll this option out? See, that's a big problem. I don't have a way out now. I can't roll my 600. I can't. I can't I can't take my option that's worth $6 and roll it out and pay 31.30. Like something's wrong there. I'm missing something or something. I don't know who uses this type of. I don't know if anybody does. I'm sure someone has tried it, but I'm really not sure. I'm really not sure to be honest. Um. So how is this one? Let's see. So the 310.7750. 310 here is 54. Damn, that's 50% more. They do not like to let you have this strategy at all. That is horrible. January 18th has a 600. Well, we already bought. Well, we already bought this in the prior one. So I'm trying to do somewhat of a realistic walk up. I'm not trying to fit what you see on the chart to our situation. Yeah, so I've already bought the January 18th for 2020, or I'm sorry, for 2019. I bought it for 2019. They rolled out the January 2020s. So I just can't roll this yet. So I guess I have to go out. Okay, so I can't roll it. So I just have to go out further. I have to sit on my hands. There's literally nothing to do there without destroying what I've done. Cuz my current options were $3 and I can't pay 10 times that for a new option. It's just impossible. Okay. So let's go out another 3 months and see what happens. 1, 2, 3. And what do we got now? So all right, so let's see. In December, I'm going to write some notes here. In December, the market makers fucked us. Let's go out 3 more months. Hey, hold on a minute. I'll be right back. Okay. Oh, you could hear the kids, Blair? Really? I wasn't smacking anyone. I was just checking on them. Oh, I'm on RTX voice. That's kind of weird. But yeah, I was talking to the kids. What else am I doing? I'm talking to the kids or I'm going to the bathroom. That's it. You got a 50-50 proposition. Okay. So we're going to go at 3 months to June 16th. All right, 3/16/18. Let's go. We've got, okay, same January 2020s. So let's look at our January 2019s. Let's look at our strike price. And we're worth, what are we at? The 600? We're at 305. Geez, we're still depressed. Current is 305. And the new option they have out is still that January 2020. And they do have a $600 option now, but it's 1780. Okay. That's a significant difference. That's a whole year out too. That's probably why it's so expensive. But notice because we did nothing, we were patient. We said, okay, let's just wait. Now the price is cut in half at least, and we have higher strike prices, so we did good. Okay, so we have a 600 for 1780. 1780 for 600 1 year further. The question is, do we roll that? So our value here is -4. And then our 600 here. So that's an entire year. That's going to be tough to swallow because you're already down so much. Your theta here is -0.02. So this is still a cheaper trade 3 months later. So I guess the question is, do we roll at 17? That's still really hard to stomach. That's still super, super hard to stomach. You're getting a whole other 365 days, which is what you're paying for. And I mean, that's really what we're looking for. Okay, so in this particular case, we're under a year out. So let's go out 3 months further. Okay, I'm going to write too expensive because option is too far out. Move up 3 months. Okay, so we're just holding nothing. We haven't hurt ourselves, so that's good. 1, 2, 3. June 2018. All right, so now we still have January 2020 and our June 2021. No, January 2019. All right, now we have a bunch of other possibilities. We're still at $358. We really haven't moved very much. Let's go check our 600. We're actually at 455, a little more respectable. So 455, which is not quite right, but anyway. For current. And now let's go roll to January 2020 again. Same option, the same expiration. Hello? Oh, that's weird. It died in the middle of the stream. Okay. So my audio is back. I don't know where I bat at. And I don't even know if anyone's still listening, so hope I'm not boring you guys to death. But this is called homework, by the way. Talk about homework. This is homework right here. Amazon's up 1.3. Square's up 5%. Facebook's up 1.5. Facebook's down. Microsoft's up 1. All right, so we started out paying $1,220, and I kind of want to roll here because we're getting to the point, we're getting 6 months away from our option. I do kind of want to roll here, even though we're going to have to pay more. We're paying the least that we've had to pay so far by a decent margin. So we're going to have to pay. So we're going to roll here. And we're going to roll it 2150 minus 455. Okay. I don't know what just happened. $16.95. So we have to pay an additional $16.95 for another year. Okay. All right. So I guess we kind of have to. We're gonna stay with that same strike price. Now I think this is part of the reason this is likely a problem is because we chose so far out of the money. We chose the furthest out of the money we could get. I mean, it's Tesla, so you kind of you want that bias of being long term. Okay, so 1695, 600 strike. We could reduce our liability and go out to the 1250, but then you obviously have to expect that to go up another $100 in another year. You would have to have that expectation because Tesla's done nothing, but this does keep your cost lower. So we could roll out to this. Now look, we already know that anything we do here, we're going to make a shitload of money on. We already know that because we already know the price history. In the moment, okay, so let's just try to stick with this. Let's do that. Let's just stick with that. We could diverge strategies here, but they're both going to result in obviously good profits. I was trying to, because we could do the same thing in Tesla here. We could go out sideways for a longer period of time. But by the reason you get that major decay on the price is because you're buying so far out of the money. Remember, we started off buying at 600 strike when it was at 300. So that is a pretty ballsy move. Okay. So let me just I'm going to write down the 1250 for 700 too. All right, so now we're on January 2020. Let's go out 6 months. All right, so December 18. We're on January 2020. Let's take a look at our January 19s, which are actually coming up really soon, and our 600s are fucked. They were already fucked, but now they're doubly, triply fucked. Look at that. They're worth nothing. They're worth nothing. We knew this was going to happen. This is why we're rolling. We're anticipating. We don't know when this is going to pop. Okay, so we let we let 1 year go by. We essentially lost most of that 1,220 we initially purchased, and we bought another year for $1,695. All right, so that's gone. Now we're up here in January 2020. This is our new. So we rolled in that last period. We rolled. That's what rolling is. You sell the one for $455. You buy the new one for $2,150. All right, so we're looking to see if we're gonna roll. We could roll to June. We could roll to Jan. We could do Jan of 2021. So Jan 2021 is 600 for 21 bucks. Okay, so we're going to move up 6 months. What are we at? We're at 12, 21, 18, up 6 months. And our 600s are worth 21. Okay, so we're flat. And the price is basically flat too. Okay, so and then let's go. Wait a minute, is that 2021? Hold on a second. Okay, January 20 600s are worth 750. My bad. So the current ones are worth 750. 6 months later, we are already down significantly. We're down another lot, another tremendous amount. 750. So if this was all your capital, you're already screwed in this scenario. Because the price hasn't moved, so you're essentially evaporating all that time value. It's just evaporating. All right, going out to January 2021, we go to 600 again because we're super bullish on Tesla. We're right back to buying 21 bucks. So every year you're buying essentially $21 worth. So we're going to have to pay another $21 6 months later. So you're 12.20, you're up 16.95. Now you're looking to pay 21. Jeez. Theta value of 4. Let's check the June because we're cheap, which probably isn't a good idea. You're paying 14. So for an extra, so you're at 750. You double that for 6 months, and then you another $7 on 14 is 21, which is exactly what you're paying for the January. So you may as well roll out the January again. So you're going to sell for 750. You're paying 13.5. For January 2021. So you're plus 1350 at this stage. All right, so at this point, I have a new page on my book. I have a little notebook I'm writing on. We have paid so far 1350 plus 1695 plus 1220. We paid 4265. Jeez. 4265 for Tesla 600 call. And we're just rolling it. So we're just continuing to roll this call. All right. And we own 114, 21, 600 call. All right. So now let's go at another 3 months. To March 2019. And our current is 120, 114, 21, 114. So we don't have anything new here. We don't have a new option, and we're just worth 975. No new expiration dates. Let's go out 3 more months. So June 21st, 2019. And our current $600 is worth, wow, this is in June. Oh, this is in the middle of the bear market. 221. Tesla's dropped significantly. 320. Talk about holding through some damn pain. Wow. That's holding through some damn pain right there. All right, do we have anything new? We have June 2021 for 600. Oh, we don't have that. Another situation where we don't have a 600, so we can't roll. New has no 600 strike. But we have a June. So we can't do anything there because we don't have a new 600 strike, and we basically have nothing left. Our option that we've now paid $42 for. We've now paid $42. We started in 2017, keep in mind, you. So we've already gone through. We're 621, so we're right here. Yeah, okay. So let's go up 3 more months. We can't do anything here. And we're at September 20. We're 9/20/19. All right, so let's take a look. That's our June. Let's go to our Jan because we're in Jans. Okay, now we have a new 2022. Let's go to 600. And it's with 174. Oh my gosh, we're just puking at this point. You're about to throw in the towel on this whole fucking trade. You've literally lost all of your $42. You now have 174. Wow. Holy crap. You've got nothing to even try to roll. And now you want to buy another year out. Okay, so see if they have a 600 strike, which they may not. They don't. Ooh, you are islanded up at the top, son. Holy shit. What do you do here? Okay, so the good thing is you have a January 2021 option. We're in September of 2019. You've got a year and 3 months. We got to go forward 3 months. No 600 strike. Still have over 12 months left. Keep on keeping on. All right, keep on keeping on. So at this point, we paid $42. We got to get this thing's got to get to $643 just for us to break even. That I'm not a fan of. All right, December 20th, 2019. Our 600, we got January 2021. Now we're getting just over a year. Tesla's at 405, so we've already moved up here. 600 is worth $20.60. Okay, now obviously things are going to start getting better. Okay, so we have $20.60. Can we roll out? We have January 2022. Yeah, I'm looking back in history. This has it's called Think Back. You can actually, you can't, oh, you can't see it. Okay, so this is called Think Back. And what this does, this allows me to get options prices from the dates, whatever date I put in here. So I'm going forward in time 3 months, trying to figure out if we can continue to roll these. Okay, so we are January 20th, and let's go. Okay, so there's January 2022. Let's go to 600, and that is worth 45.60. So that is yeah, I'm doing a paper trade exactly. I'm trying to see if I can roll Tesla options into the future and how it's going to fuck me. When you're paper trading, in my opinion, you should be looking for how you're going to get fucked, not how much money you're going to make. Let me go refill my water. I'll be right back. Damn, it's 8:05 already. I don't have a bunch of time left. I kind of wish I did. Could try to finish this afterwards. My whole day goes to shit after the power hour. I hate it. All right. Okay, so our option's worth 2060. So it seems like we're paying $20 to $25 for a year of time. We've done this many times now. We have 1780 for a year, 2150 for a year, and now we have 4560, but our option's worth $20. That's 25. So the question is, do you want to roll? Let's just keep rolling it. Okay. All right. So we're at $20. So we've only lost 50% of our capital over 2 years. Oh, we're horrible, horrible traders. This is we're just shitty ass traders. Um, this is giving me more conviction in my method than anything else, probably. Okay, so we have okay, we can try to go out 3 more months, or we can roll here. Now at this stage of the game, where are we at? We're 1220, so we're right here. We've just broken into all-time highs on Tesla. We've just broken. This is brand new. Um, I bought earlier than this. So at this stage, we're looking for increased volatility. We know we have a year left. We could just hold this. I mean, and give it the year and be done with it if we wanted to. We don't know the scale of the run. Because keep in mind, the true scale of the run is like a $5,000. This is a $5,000 Tesla stock right now. And we're at $400. We have no idea this thing's about to 10x. Well, see, that's the thing, Jared. We know this gets really good because Tesla's been ignored for so long. That's the problem. That's the reason why it rallied the way that it did. Is it was just ignored for too long. So we know it's going to rally huge, but in our simulation we don't. So the question is, we have just over a year left in our option. We have to pay another $20, $25 exactly, actually, to get the new option. Do we do that? Most stocks aren't going to 10x on you in, a year. So, I mean, we don't, knowing what we know now, yeah, you can just hold that till January. We're already lower than we were in January, right? We're at 688 versus we were over about, 850 in January. So obviously the best trade here would be to not to roll over. The question becomes, so we have January 2021s. We have choices here. We could go all the way out, or we could try to go out to June 2021, which would be a cheaper rollover at 32. So you go from 20, so that's 12, and you're paying a little bit more for that extra time, but I don't know. Okay, money aside, I would say we roll. We're starting an uptrend. We're rolling because we think this is the beginning of the Tesla run. So we're gonna roll. We're gonna roll. We're gonna stretch ourselves a little bit, and we're gonna do it. We'd make more money if we didn't, but we're going to. All right. So we're gonna buy the 4560. So plus 25. So that's gonna equal 67.65. Okay, so we're gonna buy for the 2022. So now we're gonna go out 3 more months. March 20th, 2020. And this is in the middle of coronavirus. Oh, this is awesome. We are royally screwing ourselves left and right. This is hilarious. This is so funny. Okay, so we're January 2022. We now have a June 2022. Oh, and our 600s are worth 129. Okay, so we're not too bad. Okay, so we've almost doubled our money. We've almost doubled the account at the 67.65 point. We bought our price cost right now is 67.65 and we're worth 129.50. So we have doubled our money. We do finally have a profit from when we start this? June in 2017 to March of 2020. You've waited a really long time, 1 year and 9 months to be loosely profitable. You've already doubled your money. And we are, yeah, because we've gone up significantly from here. So we even have, okay, so the question is, are we rolling again? June 2022, 600 is 144 and we're at 129. So the new is, wait a minute, do I have a January? No, June 2022. So that gives us an additional 6 months. That's actually not too bad. If you look at the cost, we're at 144. That's not too bad. Well, at least it doesn't feel that bad. So you're looking at 144 minus 129.50, 1450. So you're still, I mean, that's actually, our volatility's gone up. So that's almost what we would have paid for a full year a few months ago. So I would say we roll that out. So we're going to roll and we're going to um, plus 1450. So our new value is 82.15. Okay, so that's our total capital inflow to right to this point is 82.15. Okay, so now we have the June 2022s. Let's go forward 3 months. So it's June 19, 2020. And now, obviously, this is in the middle of probably one of the best. And June's actually a little lower. June's only right there. So, June, we haven't had this big breakout yet. But at this stage, we have a full 2 years. We have a full 2 years. So, let's take a look at. Oh, and we don't have any new. So, there's no new. And we're deep in the money at this point. We are so lucky. 532. And our total is 8215. So that's arguably 400% or so. And there's nothing new here. There's nothing new here. Okay, so we're going to go out 3 more months. I got to get going. So 9, 19, 2020. 9, 18, 2020. Probably have some new. So I have January 2023 is new. So we're in June. Okay, so we're in June and we are worth, geez, everything's $1. 158. This is post split. Shit. God damn it. 831. So we got to go before 831. 828. And I gotta go. Day before split. Okay, so we're worth $16.79. We're worth $16.79 in one of the best bull markets you ever hope to involve yourself in. So we have 1679 divided by 8215, and we're not even done yet. So we've 20x'd. Even with all of that rigmarole, we've still 20x'd. Let's see what we would have gotten. If we just held. So our price today, the stock went from, we're at 6117. So it is at 68.58. So we go from 342 to 820. 828. 463.7. Holy shit. No way. That's not right. This is post split. 463.7 times 5. 2318. Okay. How does math work? God damn it. It's not right, is it? Six x 6.7x. We did 20. Yeah, that's pretty close. Okay, so we did 20x, and holding the stock did 6.7. All right, Jared, I was not looking at comments. Let me catch up with you. Rolling looks like it'll go gangbusters from then. The uncertainty, though, in that moment is in the past. Wow. Yeah, so uncertain. It's, I mean, nothing is certain in the market, but super, super uncertainty. Um, well, yeah. So regarding your last comment, 6x versus 20x, obviously the move was ridiculous. I want to go back and do this with Apple if I can. I don't know if I can go back that far with options prices, but I want to do something that didn't go super parabolic. And this isn't even including the next run up to 500. That's not even including that. So from that perspective, I think it could get even better. I'll try to do that later. But yeah, some of those decisions, keep in mind, you started out spending $1,200 and you ended up having to put in $4,265 before you actually got profitable. Then you had to add an additional $2,500. So, and you could still be rolling. So I think I'm going to continue this, and I'm going to try to do some other stuff as well. But all right, I got to go. I got to get ready I got to do the power hour right now. And the kids should be in school. Okay, everyone.